Welcome, everyone, to episode 12 of the Manage to Win podcast. Today, we're going back in time. We're going to talk about David's experience on the Pacific Stock Exchange. Lessons from the Pacific Stock Exchange is what we're going to title it. And Dad, welcome to the podcast.
Yeah, good to be here. It's like going back in a time warp, that your idea here of going back like almost 45 years to when I started on the Pacific Stock Exchange, when there was a Pacific Stock Exchange.
Yeah, it doesn't exist anymore, right?
Now it's a fitness club now. Yeah. I think we looked it up and like 15, 16 years ago it closed. So yeah, it's a neat old building.
How'd you get started on the Pacific Stock Exchange?
I where do I start? I started working when I was 16. I had a full-size Ford pickup truck, and I was, taking stuff to the dump or helping people move or whatever, and made good money. I mean, in 1973, 74, 75, I was 16, 17, 18 years old, making $20 an hour. It was great. So, and I worked hard for it. I went to Cal Berkeley primarily to play water polo, and my parents had been divorced for a couple of years, and they thought I was golden boy and knew everything. And I happened to believe, to a certain extent, I knew everything too. I don't know that you had that much problem when you were that age, Jeff. I didn't get the impression when you were going into college that you thought you knew it all.
I don't know. I think I was more unaware. I just didn't know anything. So I was like walking around.
I don't know. You're a good guy. Yeah, still are, but. I had a bit of an ego, and I was also a nice guy, but I had a bit of an ego. Anyway, I went to Cal Berkeley, and the water polo thing didn't pan out the way I expected because I thought I was better than I was, and my girlfriend from high school had gone into the ice follies. Your mom, Jerry. And she was writing me constantly about how miserable she was in the ice follies. And I had no idea why I was at college. So I decided I would quit school after a quarter, and I would go work on the floor of the stock exchange for the same company as my stepfather. And that was Mitchum Jones in Templeton. And I had all this plan where I was going to ask your mom to marry me, and I was going to ride in on my white horse and save the day because she was miserable, and I was going to go work as a clerk on the stock exchange for, I think, like $800 a month or something like that. I think that was my pay. Something, I don't know, it was something ridiculous. Might have been twice that. Maybe that was my paycheck twice a month. I don't know. It was low. She realized I met her in Las Vegas where they were doing their final show before Christmas break, and she figured it out. She said, "You're not going to ask me to marry you, are you?" And I said, "Well, yeah, I was thinking of it." And bottom line, she turned me down. But I went to work on the floor of the stock exchange that way as a clerk. Mitchum Jones Templeton, at that time, Pacific Stock Exchange had two floors. They had a San Francisco floor, Northern California floor, and a Southern California floor in Los Angeles, downtown LA. And we were connected by some telephones that had 6 lines, red line, green line, blue line, whatever it was. And you would press a little button on the phone. You'd say, "I like General Motors on the green line." And you'd be, the General Motors specialist in the Southern California floor would pick it up. And the broker, I wasn't a broker, but the brokers would do that. And then they, the broker would say, "I got 500 motors to buy, what will you sell them for?" And, try to work that out. So it was pretty funky. I worked there were 2 specialists for Mitchum Jones and Templeton on the San Francisco floor. The floor in total probably had about 16 specialists, a bunch of brokers, a lot of personnel. And I worked for the one that, not my stepfather, but the guy who worked with him, Rich Saplusky, who was a really nice guy, kind of a crazy guy. I had actually worked on the floor of the exchange as a clerk, a runner, because as a specialist, we would fill out a ticket on what we did and put it in front of us on this little shelf, and the runners would pick them up, put them in a box, and somebody in the back room would enter them in. Now, keep in mind, this was, 1975. And that was big stuff. We had computers and everything, but it wasn't totally automated.
So you would, so the clerks, the specialists would write the orders and the clerks would take the orders and over to where they needed to be processed?
Well, a specialist or a clerk would write the order and you'd put it on this diagonal shelf that's in front of your post.
Uh-huh.
And the runner would see that something had come out, or you'd be called as a runner. Now, remember, I'm backtracking now. I'm talking about the summer before I went to Cal.
Right. Okay.
And it's the most boring job in the world, being a runner. I mean, it's totally brainless. Walk over, pick the ticket up, put it in a box. I mean,
Okay.
and stand around and do nothing in between then. And I lasted about a month, maybe 6 weeks. I was just going nuts. And then one of my uncles was kind enough to say, come and work with me. I got lots of painting to do. He took care of apartment houses. And so I went and worked for Uncle Jim, and he was great. And
this was before you went to Berkeley?
That was before I went to Berkeley. So Then I went to Berkeley, and I got this plan where I'm going to, ride in on my white horse, save your mother from her miserable ice follies experience, which then she decided she needed to stick it out. And I went to work on the Florida Stock Exchange. And the Phi Cap house, the fraternity that I lived in on Berkeley, they let me stay the full year because they couldn't really find somebody mid-year. And also, I was the carpenter of the house. So when they got drunk and broke a door or broke a window, I fixed the door or the window. So, I paid for my room and had my roommate still, Dave Wells, good guy. And I would just get up at 4:30 in the morning and get to the stock exchange because we started, I had to be at the stock exchange by 5:30 or 6 to then get the books all organized. And I believe we opened at 7. Might have been 6:30, but it was 6:30 or 7 a.m. And then the New York Exchange would close at 1 p.m. And we stayed open for another hour and a half till 2:30 p.m. Rarely anything happened, but sometimes things did.
Mm-hmm.
It was really boring. So I was either off work at, like by 1:30 or 2:30. They have the afternoon free, but you just got to get to bed at a decent hour, or it can kind of get crazy.
Yeah, that must be tough to do in a frat house.
It wasn't too bad. The guys were respectful. They were nice. I did go through pledge week, even though I wasn't in school in January while I was working. They're pretty nice. They didn't force me to get too drunk except one night. And but being a clerk on the exchange, so then I'm a specialist clerk. What that means is specialists are around the edge of the floor, and they make a market in a stock, in about 50 stocks. So somebody comes over, the brokers have to go to the specialist and they say, I got 500 motors to buy, like General Motors. I got 500 GM to buy. What's your market? And then you quote a bid and an ask. So you quote, here's what I'll buy at, here's what I'll sell at. Okay. So you might say, I'm 68 at a quarter. Means I'll buy at $68, I'll sell at 68 and a quarter. And what that means is I have to buy at least 100 shares or sell at least 100 shares at that number. I may actually want to do 5,000 shares or something like that. But also keep in mind, I don't know if you looked lately, I don't know what the volume is on the stock market, but it's hundreds of millions of shares each day.
Yeah, I'm sure.
When I worked on the Florida Stock Exchange, I think it was that summer when I was the runner, that was the first day the stock market ever did 20 million shares in a day.
Wow.
So our average day was probably less than 10 million. It was probably like 5-6 million, it might be a slow day. So it was a totally different market. And then it got up to, I think when I left, it might have been near 30 million shares or something like that.
Well, that's because it was all person to person, right? The internet wasn't invented. We had some computers, some transmission lines across the country, but now you have electronic trading. You have machines trading, a million shares at a dollar, and then a million shares, they'll sell it for a million shares at $1.01 just to make, 1 million cents, whatever that is. But they'll do it over and over, right? So the volume must be astronomically larger.
Yeah. So it's a totally different game now. But it was good. I mean, Sapluski was a really nice boss. I worked for him for about a year, a little over a year. He's a really nice guy. He ended up letting me make a market in one of his stocks. and, paid me a little bit if I made some money. And, no boss is perfect, but he was a super nice guy. It was nice working for him. He had to put up with my ego a little bit, and sometimes I disagree with his decisions, and I had no place to do that. I was 18, 19 years old. I didn't know anything. And then another guy came up that took my stepfather's place, named Jimmy Filerman. Jimmy was probably like 5 feet tall, and I'm 6'2". And he was a very aggressive, kind of Napoleon type guy. And, he had his rough side. I mean, he was very emotional about trading, and because he was short, he would literally stand on his chair and yell, "I want to buy motors. I want to buy General Motors." And we didn't have brokers that really did anything. So they're all like, "Oh God, here he goes again." And he would do the same thing, stand on the chair and yell at me if I made a mistake,
Right.
But I have to tell you, as tough as he was one of the most fair bosses too. I mean, he gave me raises without me asking for them. And he wanted me to get a percentage of the profit that he made on the post, the specialist post, because, I was helping contribute to it.
Sounds like your first exposure to performance pay.
It was. And I had no clue. I loved the idea. I don't know whether I ever made any money. I don't know that he made that much money, but he was a very thoughtful guy. And I worked with him for about 6 months or so. And he convinced me that the San Francisco floor was going to close. He was from the LA floor. And the LA floor was going to be the surviving floor. And I really should move down to the LA floor. So in July of 1977, I married your mother. And we went on a honeymoon in Hawaii for, I don't know whether it was 10 days or 2 weeks. And the day after we came back, we packed up a truck and moved to Los Angeles.
Wow.
And I worked down on the floor in LA for about 6 months. We lived in Santa Monica for about 2 months. Santa Monica was not as nice then as it is now. And we lived in an apartment house that was built like the letter O, basically a rectangle. So our apartment, we could see across, and there was another apartment right across from us. And behind us, our bedroom, there was windows, and it was apartment row. So it was another set of apartments. It was really pretty lousy. My Uncle Don, who was kind of a crazy guy, but a great guy to me, always nice to me. We were there about 2 months. He's like, "Hey, this is terrible. I'm going to kick out my renters that are in this extra house I have above our house. And why don't you come in? You can live there. I need a bunch of trees cut. You can help me fix up the place in exchange for rent." It was awesome. So we were in Pacific Palisades.
Wow.
In a house, like 3-bedroom, 2-bath house. On a cliff above my uncle's place. I say cliff, it was probably a 20-foot high thing.
Right.
In an area that eroded a lot. So we're kind of like wondering if this place is going to fall over. And that's what I did. And that lasted about 3 months or so, maybe 4 months. And then he's like, "You got to get out. I want to rent it now." It's just the way Don was. It's kind of like, it's really nice to a point. But after that, it's like, you got to get away.
And during that time, you worked on the LA Stock Exchange?
I did. So I worked on the LA Exchange, and it was really a drag. I didn't like LA.
Oh, okay.
I didn't like the traffic. I didn't like the smog. I remember I would drive down Highway 1. You come out of Pacific Palisades, you go down to Highway 1, you drive over to Highway, the 10 freeway. And I'd be looking at the sun coming up, because I was going early in the morning.
Yeah.
And I would think, "Oh, it's so beautiful." And then after a little while, I realized, wait a minute, that's chocolate brown in the sky. That's smog.
Yeah.
No wonder I'm coughing in the afternoon when I'm up in these trees, cutting trees, not, half a mile from the beach.
Yeah.
So,
that's
so
where the good air is too.
What?
That's where the good air is too.
That's right. No, and if I had to live down there, that's probably where I'd live. I mean, I like that area. I do. Yeah. It's got some touches of Marin County. I would like to mention, I'm going to go through the history, but there's 3 key lessons I learned. down on the stock exchange. And I do want to go into those a little bit. One is that most people don't know how to play the stock market. They gamble on the stock market, or they do a mutual fund, which is nuts in my mind. And I can dive into that now or later. And then the second thing is I'd like to emphasize that anybody can make money, stock market or otherwise. That was another lesson I learned while I'm down there. And then the third thing, and the reason I left, is you have to play to your strengths. And after a little over 5 years down there in the stock exchange with different jobs, and I can go into those a little bit more if you want to hear some of the stories, whatever, you have to play to your strengths. And it was not one of my strengths. And that's why I left. And I can talk more about that. But those are three key lessons that I think everybody can benefit from. The one, play to your strengths, people have heard me say many times. They've read it many times. My particular short story on how you can make money in the stock market and then how you can make money in general may be new to some people and may be of value. But it's certainly important to know if you're going to be a leader, whatever your role is in a company. I think everybody should be a leader. But if you're going to go out and make money, I know how to manage a checkbook. I can balance a checkbook with the best of them. But as far as the budgeting side and profit and loss on a business, that type of thing, Jeff, that's not my strongest part.
Yeah.
That's why you run the finances with a company. Because you do it better. But anyway, it's I'm not sure where you want to go now. I can continue through the job history thing and stories, or if you want, I can jump into those lessons or save them for later, whatever you want.
Well, let's jump into lessons since you mentioned them. I mean, the first one you said was people don't know how to make money in the stock market. How did that manifest itself while working on the stock exchange, or did that come afterwards?
A lot of it came from working in the stock exchange. Some of it came afterwards. The main thing with the stock, so the stock exchange, basically anybody who does day trading or trades on the stock exchange is a specialist or some other form of trading, is basically gambling all day long. So you're watching a ticker tape, and the ticker tape basically shows an abbreviation of stock sales, which of course goes pretty fast now.
Yeah.
When I was down there, it was going slower, but it was still moving. And also you have your computer now where you can track what's happening. And so what you do when you're gambling each day is you kind of get a feel for the ebbs and the flows. There's somebody buying stock. You don't know how much they have as an order. They may have 5,000 to buy, or they may have 5 million shares to buy today. Okay. And how they work that order. And that order gets worked by going to a specialist, going to the market, seeing what's available, and then talking with other people. The broker talks with other people about, what's available. Sometimes they'll approach large pension funds or whatever, different funds about looking to buy this. Do you have anything for sale? If it's a big chunk. So as a trader, you watch the ebb and the flow, you figure out when to buy, when to sell. As an individual investor, you get tempted by the emotions of the market. And the stock market typically moves 6 months ahead of the economy. So it's running on emotion a lot. And so when people are buying a stock and it's going up, oftentimes, it's the time to sell it, not to own it. Now, there's two different types of selling a stock. One is you own stock and you sell it. Now you don't own it anymore. The other is what's called selling short. Selling short is a risky move, but it can be done if you're smart. You know what you're doing. Because selling short is, I'm going to sell stock I don't have, and then I'm going to borrow it from over here, and the brokers take care of all this for you. Mm-hmm. I'm going to borrow it from over here in hopes the stock drops, and then I'm going to buy at a lower price. And as a specialist, you're doing that all day long. You're either buying stock, making a market for it that's coming in for sale, or you're selling stock in advance of owning it because you think it's safe to sell it because it's going to go down, it's going to back off. And as you kind of indicated, if we make an eighth of a point or we make a quarter of a point, we're making money, and it adds up.
Right.
It also can go against you. So as far as learning how to play the stock market, the first thing is you only invest in stocks where you understand the business.
This is for individual investors?
Yeah. Yeah. So, I mean, it's nice if somebody recommends a stock, a stock brokerage house or whatever, but usually by the time they've recommended it, it's pretty strong already. Okay. So you have to know a stock. To give you an example, so many years ago, probably around 2005 or something like that. I don't know the exact time frame, but I encouraged my mom, Nana, your grandmother, to buy Chipotle stock. I had been in a Chipotle restaurant. I loved the food. I looked into the company because I thought, wow, this is pretty new. Well, they had about 250 restaurants, maybe 300 at the time. And I saw that they were 80% owned by McDonald's. And they wanted to expand rapidly. Well, 80% owned by McDonald's means that they know distribution. They have distribution. They have a whole distribution network. They know how to franchise. I mean, what McDonald's is great at is defining best practices and rolling them out across thousands, tens of thousands of stores, restaurants. And they had a unique thing going on with the food. I mean, it tasted good, the way they did it, the way they presented it. It was all good. I thought, this is a good one. And the stock hadn't really gone crazy yet. It wasn't cheap. I mean, it was like $200 or $300 a share, but it hadn't gone crazy yet. So I had my mom buy some. That's what I mean about understanding it and knowing it. Okay. I didn't have a broker say, buy XYZ stock. I know nothing about the industry. I really know nothing about the company, but it sounds kind of interesting. So I invest. And I really don't understand highs and lows of what the stock's been or that type of thing. So I just invest based on their advice. That's foolish, in my opinion. Mutual funds, if you look at the record of mutual funds, the vast majority of them make next to nothing or lose money. You don't get anything with a mutual fund. You're much better to invest in something you know. Now, a few things about the stock market. So you need to learn some basics about charting. Now, the Dow Jones Industrial Average has been manipulated a lot over the years. That's why it's so high right now. If it had been the original stocks, it wouldn't be anywhere near as high. Okay? But it's been manipulated to get higher. But you still can look at it, and you need to learn how to read charts, just the basics of reading charts. So you need to understand a W formation in a chart. Now, that can be for the Dow Jones Industrial Average. It can be for an individual company's stock. So a W, where the stock goes up a little bit, it drops, it comes up, it drops, and then it holds that prior drop where it had stayed before, and it goes up. Okay, it's going to climb. And you can draw a diagonal line to see the place where it's going to stop again. Okay? And you see whether it breaks through there. If it breaks through there, it might go on a run. Now, go ahead.
These are tactics that you learned while you were working on the stock exchange?
Yeah. Yeah, there was one guy, Doc Willoughby, who was a great guy. He was a character. He lived in Tiburon. He was from the LA Exchange. He's a wonderful guy, but he was huge on charting. And when my last 2 years on the floor with working for Jack Gray at Wagon Seller Durst, Doc also worked for Wagon Seller, and he would walk over and talk charts with Jack, all the time. And he was a great guy. So I don't know anywhere near what Doc knows, but I'm just saying you can learn some simple things. That diagonal line I talk about, you can see it, whether it's a diagonal line or a straight line, but you can see you run that across the peaks that a stock or the Dow Jones. And if it doesn't break that, it's going down.
Hmm.
Okay. And you also can pick up on the W, and that, if it hits that W and goes up and it doesn't break through, it's going down. So you can see those areas. You can do it on the top and you can do it underneath where it hits the bottom and it finds support. So what there's typically for a stock, there's support levels where people will buy it. And you can see it's not only that it drops down and it holds there, but if you're looking at a chart that also shows volume, you'll see that there's heavy volume there. There's a lot of stock changing hands. So people are willing to buy it there. As long as the fundamentals of the company are holding, strong. You have to take that into mind too. It's not simply charting. Charting's just one piece. And so you have to know how to read the charts a little bit. Like when I looked at Chipotle for your grandmother, my mom, it looked okay. It wasn't like it had gone on this crazy run up and, I'm going to buy it at the top. Okay. I think did we have somebody on the podcast who had talked about buying Bitcoin or something like that?
I don't know.
Or maybe I heard that somewhere.
There's a lot of people that like Bitcoin, although it's dropped now to.
Oh, no. No, I had talked with a guy who had said, he's a friend of mine. And he said, I decided I'm going to do something. So I bought Bitcoin. Well, he bought it at the top.
Uh-oh.
Okay. And he bought it way at the top. And then it's dropping off. And he's like, what do I do now? I guess I hold on to it. So you have to understand how to read a chart. You have to understand whether the fundamentals of what you're investing in stay the same. And you don't invest in the emotions of the market. When things look bleakest, like when the 2008 crash hit and it went way down, I was telling my brother and my sister, come on, we got to have mom buy a bunch of stuff because this stuff's going to bounce back. And they wouldn't do it. So we missed out on a lot of stuff. When it looks its bleakest, you have to decide, do you have the guts to jump in? Because if you jump in too early, you're going to get hurt.
Right.
So like in my history, I went through a bunch of jobs. I can go through them. But in 1979, for about 6 months, I actually became a specialist on the floor. I had some really good stocks. I had Standard Oil of Ohio. I had Standard Oil of Indiana. I had Arco. So I had 3 major oil companies. And during that time, the oil companies, after about 3 months into my tenure as a specialist, they were going nuts. So each of these stocks were jumping 2, 4, 6 points in a day up. I mean, oil was going crazy with OPEC and the rest of it. And my final month as a specialist, I was betting with the oil companies. So I'd either buy them or I'd be selling them short and, figuring out where the run is. And I got down to the last day of the month. I was up $65,000 for the month in 1979, which was by far my biggest month. I typically had a $15,000 profit or something like that, which wasn't much. And I got down to the final day, and my boss assumed, Ken Keeley, he assumed I knew how to handle myself, which was a bad. You never assume things as a boss, okay? So what I should have done with a $65,000 profit is done nothing. I've made my month. Sit here, do nothing, do the minimum. But I started playing the game. Plus, it was a Friday. Okay, so I started playing the game, and the problem was I shorted my 3 oil stocks plus another one, Standard Oil of California, 2 hours too early. And all of a sudden, and I did it for thousands of shares, all of a sudden I looked up and I was out about 50 grand. I wasn't going to lose money for the month, but I was going to lose basically all the credibility I had. And I knew with the small company, Ken's company, the small company, that he would not want me carrying all those stocks over the weekend in short positions, where if something happened to OPEC or whatever, these stocks could really go crazy. And so I just, said to my clerk, I said to my clerk, okay, cover all the positions, which we did, eliminated the risk, still made about 15, 16 grand, and I got fired. And there was a reason for that. One was I wasn't making that much money. Two was I made a foolish decision. Three was he had another person in the firm, Greg Georgekis, who was on the options floor, who he wanted to get into a specialist post. And you just can't get into a specialist post. People don't give them up. So, and Greg was a natural. Greg was not only skilled as far as how to trade, but he also was lucky, which is a very rare combination. And he was a great guy. He's a great guy. I mean, it was the right business decision. To fire me without warning or anything like that wasn't the nicest, wasn't the fairest, but it was the right decision for his business. And my point is that the timing of when you buy and sell is important. By the way, except for one of those oil stocks, every single one of them hit their high that day for the next 5 years.
Wow.
They never hit it again. And the other one went up another 3 or 4 points and never hit that high again for like 5 years. So I was right to short the stocks. I was wrong to take a risk. I was wrong to gamble on the last day. And that's what you got to know about the stock market. The timing is important. And if you want to invest in a company and you know the industry, but you know what, it's a fad, or it's something where, you're not, you got to you can look online right now and you can find out what's the positive things about a company, what's the negative things about a company. And if you understand the industry, you can make a bet. The other thing, by the way, with stock market is you should never invest more than 10 or 20% of your assets in one stock. And I wouldn't have more than 50% of my assets in the stock market at any given time. You want to spread it out into some other things. Okay. So that's some things about investing in the stock market. Did I leave anything out?
No, it sounds good. It sounds like you were going on intuition on that last day, and you just made a slight miscalculation there. I mean, if that was the high, your intuition was correct. I don't know what your track record was, but if everything was taken into account and you were correct on that, then it kind of makes you wonder if you had kept the stocks, kept your short positions. What if you had kept your short positions? The worst thing you can do is you get fired, right, for keeping your short positions. But then if it drops the next week, then you're in a good position.
Well, but it's kind of Murphy's Law. If I kept the position, then probably OPEC, somebody would have blown up some oil line in Saudi Arabia, and
right.
stocks would have jumped by 20 points on Monday, and I would have put Keeling Company out of business.
Yeah, that's a good point.
So, you just can't gauge it that way. I knew I was taking risks. The rules of the game with Ken were that, we didn't carry positions overnight that were significant typically. Sometimes we did, but I mean, I had somewhere between 2,000 and 5,000 shares of each stock I was short. And that was just a huge amount of risk.
Yeah.
And if he had just said that morning, okay, look, you're up $65,000. I don't want you to do anything. I wouldn't have done anything. Okay.
It would have been helpful.
So I'm not blaming Ken, but if we're talking about leadership, I think we have to say that as leaders, what shoots us in the foot a lot is assumptions. He shouldn't have assumed that I knew what to do on the last day of the month. I should have. I'd already been there, on the floor of the exchange, over 3.5 years. I should know. Okay. But it was not foremost in my mind.
But how long had you been working as a specialist at that time?
That was my 6th month, I think.
Oh, I mean.
But I've been a specialist clerk. Okay. I mean, I should know the routine. So There's no excuse for me to not know that. So I'm not absolving myself of anything. But if we're going to talk about leadership, I just want to emphasize that as leaders, we cannot make assumptions. Saying a little reminder or he could have come up and he could have handled it differently. He could have said, okay, you're up 65 grand. What's your plan for today?
Right.
And I probably would have cluelessly said, oh, well, I'm going to see how the stock's going to do, whatever. I may short some. I think they're too high, blah, blah, blah. And then he could have said, well, what do you think about just not doing anything? Why don't you just lock this month in? This is your best month. You're doing a great job. Why don't you keep it up? He didn't do that.
Yeah.
See how wise that would have been? Test me, see what I know by asking the question, and then reaffirm what's the best way to go.
Yeah.
Would have been much better.
Would have saved your job.
Would have saved my job. Would have saved him. I forget how much I got to keep as a member, as my profit of that 50 grand. But he kept at least 50%, if not 60, 70%, 80%. I don't remember.
Yeah.
He took a lot of money out of his pocket by not doing that. And, he needs to own his piece, as a leader. I'm not blaming Ken. Again, this was 40 years ago. And he was very, very nice to me. He made a decision. He said, this will be the best thing I could ever do for you because this will teach you a lesson. Well, that's not true. For a while I thought, well, okay, that makes sense. It's not true. And the reason is, I never really learned the discipline. One of the things that was lacking in every boss down there was really good training. And I worked for Jack Cray at the end there for the final 2 years. Great guy from Oklahoma. He was fun to work with. He was smart. He knew when to take risk, when not to take risk. He was a great guy. But I remember he was gone, and General Motors announced in early 1981, a major breakthrough in having an electric car. And the stock started taking off. And as a specialist, I should have realized, well, big deal, they got a breakthrough. It's not going to hit their bottom line for years. And I should have sold into the rally. And I didn't. I bought like 1,000 shares. And it went up another quarter point or half a point or whatever, and then it just dropped right back. And I ended up selling it and losing $250 or $500 or whatever. It wasn't a huge loss, but it was a huge hit to me because I realized I'm not wired to be on that stock exchange floor every day. It's not meaningful work for me to chase money every day. And I don't have the discipline to play the game. And I was very disappointed that after 5 years on the floor of the stock exchange, I had not developed the discipline and I could make such a foolish mistake. And Jack didn't get mad at me. I mean, he might have mentioned something, disappointment or whatever, but he was a nice guy. But I quit like within a month of that. And I went out and did contracting. I worked on houses. I did plumbing. I did roofs. I did whatever, just to work with my hands for a while for the next year, because I was just so disillusioned that, that's just not the place for me.
Well, I want to go back really quick to a comment you just said. When you were working for Wagon Seller Durst and you made that oil short trade.
Well, actually, that was with Keeley.
Oh, with Keeley. Okay.
Ken Keeley, yeah.
You talked about your boss and his decision to fire you. Considering everything, I understand his decision and it makes sense. But in some ways, he kind of missed a golden opportunity to realize that you had just learned a valuable lesson.
Yeah.
And probably in trading, the best traders have learned those valuable lessons. And so they stay away from the pitfalls. They stay away from the rallies, or they don't short stocks too soon. They wait for the right moment.
Exactly.
And he missed a really valuable opportunity to maybe perhaps develop you into a really or at least, see if you could develop into a better specialist by just coaching you through that moment.
Yeah. So I would agree with you, but as I said, back in these days, I never had a boss that gave me good mentoring.
Right.
I had one guy, Jim, can't remember Jim's last name at the moment. He was a broker I worked for a while at Quincy Cass. And he was also a very nice guy. He tried to mentor me a little bit, but didn't have structure. But I would have been totally different on the floor if I had been mentored and coached. And I mean, there's all kinds of opportunities throughout the day to say, well, what do you think we should do here? What do you think we should do there? And then coach you through it. The times where I was asked by a specialist, what do you think we should do, is because they really didn't know what they wanted to do. Or they wanted validation of what they were doing. It wasn't to coach. So it just wasn't structured that way. There wasn't a development approach. And, certainly leadership was not taught. It was too bad. Could have been a very different experience. I mean, because I had some natural abilities, but the skills I really needed some work on. So now, you want me to talk about the second thing about anybody can make money?
Yeah.
So it's an interesting thing. My grandfather, Chet McPhee, gave me a booklet called The Richest Man in Babylon when I was a young man, but he didn't coach me through it. Gave me a few tips. That was it. And you can buy it online for next to nothing on Amazon. There's several places that give a summary of it, the key points. Let me give you the key point I have from it. So the story of the richest man in Babylon is that a young man wants to be rich, and so he goes and meets the richest man in Babylon and says, how can I be rich? Please tell me the secret of your riches. And I'm not quoting directly. This is what I remember. And the guy says, okay, well, what you need to do is you need to take the first 10% of all the money you make and pay yourself first and set it aside in savings that you can then reinvest it. Now, you've seen other people build on this program to have the 10-10-80 program or the 10-10-10-70 program. So 10% can be for savings for emergency, 10% can be for tithe if you have, spiritual beliefs, 10% can be investing that you set aside. But one of these methods, all these methods are basically the same. That you take 10 to 30% of your gross income, not your net, of your gross income, and you set it aside and you force yourself to live on the rest. Then what you do with this 10% is you invest it, and you don't spend what you make, but you continue to invest and reinvest the money to build for you. You got it? Make sense? Sound simple?
Yeah.
Okay. So the young man says, I got it. I'm going for it. He meets this guy. The guy says, hey, I'm going to go buy some diamonds and we're going to go make a bunch of money, blah, blah, blah. So the guy this young man gives him all his money to go buy diamonds. Does the young man know anything about diamonds? No. Does the guy who's going to buy the diamonds know anything about diamonds? Not really. So the bottom line is he goes and buys some fake diamonds or, whatever, and they lose everything. Okay. So he goes back to the richest man in Babylon. He says, I did what you said and I invested with this guy and I lost everything. And the richest man in Babylon says, well, you only should invest in things that you understand. And that's a lot where I got that piece, that you only invest in what you understand. And the beautiful thing about America, if we can keep this country going, okay, is that you can do anything in this country. There are some glass ceilings, there are some biases, whatever, but I mean, you have the freedom to basically do anything. And so if you're great with cooking, okay, it's one of the guys I want to have on the podcast that I just got his email is Jens. Jens was behind Crave Jerky. He's a great cook. He came up with a great jerky recipe, okay? Then he teamed up with some other guys. They knocked it out of the park. The Crave Jerky was like in 50,000 outlets. And like Nestle bought them out, or Hershey or somebody, I think it was Nestle, bought them out. They made some money, and now they're knocking out of the park again, saying, "What's another category we could go after? We love food. Oh, marshmallows are boring. Okay, we'll make mint chip marshmallows, and we'll make this, that, more." So they have all these flavored marshmallows you can get, and once again, they're knocking out of the park. I don't care what your specialty is. If you love baseball cards and you know how to buy and sell baseball cards, if you love cars, if you love motorcycles, if you love to garden and you can grow something, certain type of thing, or save the seeds or whatever it is, invest in what you know. And if you save $1,000 and you can invest that $1,000 and bring back $1,200 or $1,500 or $2,000 or more, because it's what you know. I mean, some people I know at SNL Industries or SNL Integrated in Thomasville, Georgia, one of our clients, great client. One of the guys there, Keelan knows guitars. He literally can buy and sell guitars and make money. He could do it all day long if he really wanted to, but he doesn't find it that fulfilling. But he knows how to do that.
Wow.
So if he knows how to do that, why not take some money and do that and make money that way? Invest that way. You see?
Because that's like a good side hustle.
Yeah. Side hustle. And it can be, right? So the second lesson I learned is that I would encourage you, if you want to, pick up the Richest Man in Babylon book. It's an easy book. I gave you a copy, Jeff. I know years ago I gave it to all you kids. And once again, I didn't teach you how to implement it. Bad. Following the footsteps of my grandfather. But it's a great teaching that if you pay yourself first, and some people, by the way, use this program, they'll take 10% off of the top and they'll set that aside, and they'll take 10% and they'll use it to pay back debt. If you have credit card debt or something like that. You look at Dave Ramsey or you look at some of these other guys, they'll say this, learn how to live on less, take your first 10%, use it to pay off debt type of thing. And they'll have you have a program to do that. You pay off the smallest one first because you want to feel a win. And then you take whatever you were using to pay off the smallest one and you double that up. You add that to the pay off the next one, and you keep moving on. But it's the same concept where whatever you're earning, you pay yourself first. And then you invest it in something you know. Don't think that, it's very rare that you're going to go to a stockbroker and they're going to be savvy enough to help you earn more than 10% on your money. It's just very rare. And a lot of times they're being told what to tell people to invest in. Whereas working on your own, you might be able to make 20%, 50%, 100% a year because you know what you're selling, what you're dealing with. And plus, if it's something like guitars, like for Keelan, or another guy I knew was motorcycles, something like that, you enjoy it. It's fun. We have the company we got here. What do they call themselves? It's something cakes. They were great. The gal was great at making cupcakes.
Tiny cakes?
Tiny cakes. She built a whole business around tiny cakes. It started out part-time out of their house. Now they have a really nice office. They have a van that's all, done up in light purple. It says Tiny Cakes. And so do what you know. And then that gets me to my third lesson is you got to focus on your strengths, which relates to where your passions are. So it's meaningful work. And that's really critical. And after going through a number of jobs on the stock exchange, I just decided, this really wasn't for me. This wasn't going to be meaningful work. And I moved on. I've never regretted making that decision.
Sounds good. Well, I think we can wrap it up with that. Those are good. People do not know how to make money in the stock market. Lesson number 1. Anyone can make money. Lesson number 2. And number 3, you have to focus on your strengths. Sounds good.
There we go. And if you got any questions, email us. I'm happy to answer some questions.
Anyone can email us at info@manage2win.com. And thanks for sharing, Dan.
Okay. Thank you, Jeff. Thanks, audience.